Good evening, Mehul bhai.
Good evening, Mehul bhai. Should we start?
Sir, you're not audible.
Sir, you are not audible, yeah.
Hello. Are we okay, sir?
Yes, sir. Now it's okay.
Yes,
Okay.
let's start now. Let's start. Okay.
A very good evening to the esteemed faculty for today, CA Mehul Thakker ji, Chairman Ahmedabad branch CA Harit Dariwal, Vice Chairman CA Bhishan Shah, Treasurer and Chairman for the Direct Tax Committee CA Sunil Sanghvi, senior members, young members, and my dear friends, welcome to this beautiful series, 6-day series on direct tax. So let's start the series with ICI motto. I request each one of you to place your right hand on your heart for ICI motto.
येषु जागृति येष सुप्तेषु जागृति कामं 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 कामंशो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते कस्मिन् लोकः शितः सर्वे तदूनात् कश्चन एतद्वैता 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 एतद्वैता
Welcome back. The series has been really drafted very minutely, covering every aspect of direct tax, and we are really glad that our own faculties like Mehul bhai, Pavak Paragadi ji, they are always available to us for Ahmedabad branch. We are thankful to our chairman as well as the chairman of the Direct Tax Committee, CA Sunil Sanghvi ji, for drafting this beautiful series, and we are ever thankful to our all participants for supporting us in each and every event of Ahmedabad branch. With this, let's start the series. Firstly, I would request Chairman of Ahmedabad branch, C. Harit Dariwal, to give opening remarks to this 6-day series.
Thank you, Anjali. Respected faculty for today's session, CA Mehul Thakker sir, the Secretary of Ahmedabad branch, C. Anjali Choksi, Vice Chairman Bhishan bhai, Treasurer and Directors Committee Chairman CA Sunil Sanghvi, the coordinators for the session, and all the dear participants. A very good evening to all of you. At the outset, let me thank all of you. We have more than 350 registrations for this direct tax series. I'm sure people will be joining in, but I'll tell you, this series was planned within 2 or 3 hours. I think Sunil would agree. We were just sitting at the branch and we wanted to do something on the direct taxes, and all the faculties were so ready to help us. Immediately they said yes, and we could launch it within 2 or 3 hours. So thanks to all the faculties. Mehul sir, we always would love to have your presence, and starting with you is a pleasure for all of us. I'll just quickly introduce a few of the events that are there at the branch, which are forthcoming events to start with. Apart from the today's direct tax series, which covers the section 45.4, again TDS on 194.2 will be tomorrow, ITR forms, tax audit, and the entire series. Apart from this, on 17th of September, we have a very interesting session, Understanding the Coffee Can Investment Philosophy, by a very, very learned and a very well-known investment advisor, Shri Saurabh Mukherjee. So those who really want to attend those sessions, they can start registering for that. We have a very interesting session on non-corporate entities, accounting standards for non-corporate entities in SQC on 23rd of September. On 24th, we have the recently issued forensic accounting and investigation standards. So an overview of those standards will be done on 24th of September. Apart from this, two very important RRCs. One is the women RRC, very meticulously planned by Anjali Ben. I think that is they're taking place on 24th of September at Dwarka. The registrations are on. I think apart from the networking, the way the RRC has been planned is a wonderful opportunity for all the women chartered accountants to network. And it's the first time that is having this kind of RRC. And coming again to the direct tax RRC, since today's topic also deals with direct taxes, I'll spend at least 2 minutes on this topic. We have very meticulously designed this direct tax RRC. We have kept it in Mumbai for a simple reason that all the expert faculties which we want from outside, they are not able to travel because of the COVID. So why not go to Mumbai and get first-hand experience from them? With that objective, we kept it at ITC Maratha, which is just few minutes, like I did a few just near the airport, and it is a very good property. And the idea behind doing this RRC was to have a basic learning amongst ourselves. It will be a proper study. You can see the schedule that we have. We have covered real estate taxation, JDA, affordable housing, and capital gain issues. We'll be having a GD on that. We'll be having trust on the recent issues and controversies on the trust. Then again, a group discussion on the reassessment and revision, applicability of old jurisprudence in new regime, and the possible litigations. We are going to have technical session on the recent TDS, TCS changes, and also the compounding and prosecutions. There will be tax issues in insolvency and bankruptcy. So basically, anyone who wants to develop new areas of practice will also have something on that. We have a special session by CA Rashmin Sangvi on the non-resident taxation for 2.5 hours. So compiling this, I think I'll tell you, we all will be there. And the basic idea of doing this, I think Sunil Bhai and I both will be personally joining it, because we wanted to sit there and learn for 2.5 days. So RRC एक होती है, हाँ जब हमको मस्ती करनी है वो हम शाम को कर सकते हैं. But this is something which we really want to learn. We all will be carrying our acts together, our income tax act. We will sit down there, deliberate in the group discussions, and learn. So I urge all of you, those who really want to brush up their skills on the direct taxes. Mehul sir is joining, Sunil Bhai is joining, a lot of our committee members are joining for this. Even I will be there for 2.5 days. So we'll be having a great learning together. Do register for the same. The last date for early bird is 20th of September. But more importantly, the flight tickets will rise. So I think the earlier we book, the better it is for us. So please take advantage of this direct tax RRC. Again, it's happening for the first time, and I'm sure we'll make it a wonderful experience for all of us. And there are 2 special sessions for young members. Now, what is this? A lot of members had a question. So हमने जो टॉपिक्स कवर नहीं किए हैं डायरेक्ट टेस्ट के अंदर, हम उसको भी यंग मेंबर्स के लिए कवर करेंगे. So there are in-house faculties will be traveling and they'll be delivering with those topics as well. So a full learning for 2.5-3 days is guaranteed, plus a lot of networking amongst ourselves. So please do register for that. And apart from this, I think today the CA final results have been declared, and we are very happy to share that there are 5 ranks from Ahmedabad, and we are just getting the database compiled, but very happy to see the number of rankers. Each exam we are getting at least 4 or 5 ranks from Ahmedabad. So congratulations to all the students also. With this, I once again thank Sunil Bhai and Mehul sir, of course, for taking the first session, and all the faculties for making this beautiful series possible. Thank you so much.
Thank you, Chairman, for the important updates and guidance. I think September and October month, along with festivals, will be rocking at Ahmedabad branch of ICI too. I would again urge all of you to take the best advantage of it and join us for the learning as well as the fun sessions. With this, let's start the session. I would request CA Sunil Sangvi to take the session ahead.
Thank you, Adrivan. Very good evening, Chairman C. Arif Dhariwal, Vice Chairman C. Bisan Bhai Saab, Secretary C. Eminent Speaker, today's faculty, and my friend C. Mehul Thakker, and all dear participants. Welcome to this DT series for 6 days. We are going to discuss the season has started for the ITR forms, the tax audits. We are having 2 full-fledged sessions on Wednesday and Thursday on ITR forms and tax audit reports. Apart from that, we know the taxation of the accounting of the sales and security, the mutual fund transactions, the FNO transactions, and the last session would be the recent judgments in the income tax. I would request everyone, as said by our chairman, for the RRC, DT RRC, the very first time the Ahmedabad branch is organizing the RRC on direct taxes. We already seen the RRC on the indirect taxes, but this time, the first time, on the direct taxes at Mumbai, ITC Maratha, we have the limited seats of 75, and requesting everyone who want to learn for the Power Pack 2.5 days, please do join and take the benefit of the early bird registration also by the 20th September. Welcome, Mehul sir. I would like to introduce the Mehul sir. No doubt everybody knows him very well. Still, Mehul Thakker is in practice for more than 23 years. He is an expertise in the field of direct taxes. He has hand of experience in providing advisory service, handling assessment, reassessment, assessment in the search cases, and the first appeal. He has also successfully argued before the ITAT Ahmedabad also. He has been authored on the comprehensive book on the direct tax laws and the international taxation. He has also been authored for the book e-book on the practical aspects of the Finance Act 2010 to 2020. He is a member of IT Bar Association and various other boards. He is a regular speaker at our branch, CA study circles, associations, all Gujarat Federation of Taxation Consultant, and many other forums. With this brief introduction, we welcome you, sir, and let's have a big round of applause for the Mehul sir for spending the time and sharing. Welcome, Mehul sir, and now the dais is yours.
Thank you, Sunil bhai. First of all, let me thank Almighty who had made me capable in terms of sharing my views on this subject. I'll congratulate our young and dynamic chairman, Harit, for consistently, even Corona, I think we are still not on face-to-face. Post-Corona and waiting for third wave, he is organizing all classical events, unbelievable, unexpected events. And even also, I am a part of co-op member of committee. So I will also recommend that RRC should be a grand success. Every team member has worked hard for RRC. I am thankful to the other committee members, Vice Chairman Bishan Bhai, Anjali Madam, Secretary, and the other office bearers, providing me often and often the opportunity to share my views on the subject. Now, let me move toward the subject directly. Today, I have been invited for Section 9B and Section 45, Subsection 4 of the Income Tax Act. Both the provisions were introduced, Section 9B was introduced by Finance Act 2021, and Section 45, Subsection 4 has been completely substituted by Finance Act 2021. Now, this topic has already been discussed at various forums. When you have already seen budget, in budget also these provisions were there. Of post-budget, we had certain discussion on this. What I'll do today is, I'll discuss this in three parts. First part, we will see what was the position of taxation on partnership reconstitution before amendment. So that would be part one. In part two, we will discuss what the amendments carried out and their applicability. In part three, I will share the practical aspects of CBDT circular and notifications. And in part four, I will slightly give a hint about the possible litigation on this amended provision as well as newly inserted provision of Section 9B of the Income Tax Act. In these four parts we are going to discuss. It is going to be a lengthy session. The opening has been done with me for the entire direct tax series. Wonderful topics have been covered up in this series. So let me start with some small presentation. Kindly pay attention on screen. Let us look at, first of all, about taxability on partnership reconstitution before amendment. In that, I will first address what is the nature of partnership. We all are aware about Section 4 of the Partnership Act, which defines partnership is the relation between persons who have engaged, who have agreed to share the profits of a business carried on by all or any of them acting for all. Persons who have entered into partnership with one another, they are called individually partners, and collectively they are called a firm. And the name under which their business is being carried on is called a firm name. So this is, we are all aware. On this, what was the observation of Supreme Court in 2003 about the nature of partnership? It is a very landmark decision of Supreme Court in case of Kaderwali Sahib versus Gudu Sahib. In that, the issue was about that there was a settlement recorded among partners at a time of dissolution of partnership firm, and assets were distributed. The document of dissolution deed where settlement was reached among partners, whether it requires registration or not, that was the question before the Supreme Court. And what Supreme Court answered in that, Supreme Court says partnership firm is not an independent legal entity. Partners are the real owners of the assets of the partnership firm. So far as firm name is concerned, Supreme Court was of the view that it is only a competitor's name given to the partnership for sake of convenience. And therefore the assets of the partnership really belong to and are owned by the partners only. So long as partnership continues, each partner is interested in all the assets of the firm, as each partner is the owner of the asset to the extent of his share in the partnership. But Supreme Court noted that when dissolution takes place and accounts are settled among the partners and assets of the partnership are distributed among the partners as per their respective shares, then on dissolution, allotment of asset to the individual partner, this is very, very important observation, allotment of asset to the individual partner is not a case of transfer of asset of the firm. Supreme Court said that asset which were belong to each partner will after dissolution then allotted to the partners now individually. So earlier, who were the owners? Partner. During the meantime, for sake of convenience, it was reflected in the name of partnership. And again, dissolution takes place, then asset will be again allotted back to partner individually. That was the observation of Supreme Court. And therefore, Supreme Court repeatedly said that in this case, there is no transfer, there is no assignment of any of the asset. And therefore, Supreme Court concluded that that document which record the settlement in this case is called award, which does not require any registration under Section 17 of the Registration Act, since document does not transfer or assign any interest in any asset. So this judgment is a very landmark judgment of Supreme Court, where Supreme Court says that partnership is just a mere convenience, or we can say convenience for the purpose of carrying on business. Otherwise, partners are the owner and partner will continue to remain the owner. And that's why there cannot be a transfer when dissolution takes place. And if there is no transfer, then there is no question of payment of stamp duty under the Stamp Act or Registration Act on that document. That was the first observation of Supreme Court. Now I'm guiding another series of judgment. What we are looking at is, repeatedly I'm telling, we are looking at position before amendment. Now let us look at, with this background of nature of partnership, the first question, whether retirement of a partner from the partnership firm would constitute transfer under the Income Tax Act. Whenever partner retires, and let us assume that at the time of retirement, assets are being handed over to the partner. The question is whether retirement would result into a transfer so that partnership firm is required to pay capital gain tax. If you look at the first and foremost, a very old judgment, because Gujarat is known for tax planning, even aggressive tax planning. This is Mohan Bhai, Pamabai. It was a very old judgment of 1973. At the time, definition of transfer was very narrow. Basic definition, we are aware the transfer includes sale, exchange. And then at a time, there was another words were covered, relinquishment of asset and extinguishment of right in asset. These were the definition of transfer when this matter came up before the Gujarat High Court for the relevant assessment year. Now the question arose that whether retirement would result into a transfer or not. Then what Gujarat High Court has observed, I am slightly reading initially, what it said, that definition of transfer is given under section 2 subsection or clause 47. This definition is an artificially extended definition, and which includes even relinquishment of capital asset as well as extinguishment of right in asset. Now the question is, can we say that retiring partner is extinguishing his right in his partnership firm in favor of remaining partner? That was the argument for the Gujarat High Court. I repeat, can we say that retiring partner is extinguishing right in favor of a remaining partner? What Gujarat High Court observed, that even in this artificially extended sense, that is called extinguishment of right, even if you look at that, then Gujarat High Court says we don't agree. There is no transfer of interest in the partnership asset involved when partner retires from the partnership. Gujarat High Court further noted that interest of a partner in a partnership firm is not an interest in a specific item of the partnership property. It is a right to obtain a share of the profit from time to time during the subsistence of partnership, and on dissolution or on his retirement, he will get the value of his share in a net asset which remain after satisfying debts and liabilities of the partnership. So Gujarat High Court observed that whenever what partner is getting his share in net asset of the firm. That is what we understand in accounting sense. Net asset means after reduction of all liabilities of the partnership firm from the value of asset, that is called net asset. Of that, he is getting his share. Therefore, Gujarat High Court noted, this is very important, whenever partner retires from a partnership, an amount of his share in net asset is determined on taking count on the footing of notional sale of partnership asset and given to him whatever he receives his share in the partnership, and he is not receiving any consideration for transfer of his interest in the partnership to the continuing partner. This is very, very important. What he receives is his share, and he is not receiving any consideration for transferring his interest in favor of continuing partner. And therefore, Gujarat High Court says that in this kind of transaction, there is no element of transfer involved by retiring partner to continuing partner. There is again a repetition done here, but the idea here is what Gujarat High Court is trying to, what Gujarat High Court rather established and held, that retiring partner is not extinguishing anything in favor of remaining or continuing partner. What retiring partner is doing, retiring partner is just taking his share, that's all. And how his share got determined? The share got determined by working out the net asset. And we know how to work out net asset is all about the market value of the asset reduced by all the debts and liabilities of the firm on the date of retirement. That is called net asset. So Gujarat High Court says nothing is being extinguished or given up by the retiring partner in favor of continuing partner. What retiring partner is doing, he is just taking his share back. That's all. He is not extinguishing anything. If there is no extinguishment, there is no question of attracting section 2 clause number 47, which defines term transfer, which is very much needed when you would like to attract head capital gain, because we know that twin conditions are must. There must be a capital asset, and second, there should be a transfer in accordance with the provisions of Income Tax Act. Gujarat High Court says in this case, transfer is missing, and that's why there cannot be a capital gain. Now, I'm sharing again the screen. We are looking at position before amendment. Some might have joined late. We have yet not started the amended provision. Now, the matter was carried to Supreme Court, same matter by department. Department referred an appeal to Supreme Court. What Supreme Court did? Supreme Court followed its earlier judgment in case of Sunil Siddharth Bhai versus CIT, and they dismissed the department appeal. And aforesaid Gujarat High Court judgment was affirmed by the Supreme Court. Thereafter, we have got Kerala High Court judgment of 2002. Then we have got Bombay High Court 2010. Even one more judgment I failed to mention here, it is 2003 Supreme Court. And we have got Madras High Court judgment 2019, National Company versus ACIT, where it has been clearly held that retirement would not result into a transfer even after section 45(4). We know section 45(4) has been introduced long back. Then 2019 judgment, 2010 judgment, it clearly says that it doesn't make any difference. Section 45(4) is a machinery section, but we need to see anti-section. That is when this head is being attracted. Then first is there should be a capital asset, and second is there should be a transfer. If there is no transfer, then calculation machinery will not come into picture. Section 45(4) is just a calculation machinery. It is not a charging provision. And that's why Madras High Court also clearly said the retirement would not result into a transfer. Now let us look at whether dissolution would result into a transfer. Can we say dissolution would constitute transfer under the Income Tax Act? I have picked up two judgments. Both judgments are of Supreme Court. These judgments were entered in the context of gift tax, but thereafter we have got Allahabad judgment also 2004 under income tax. But these two judgments of Supreme Court, they are in the context of gift tax, but they are very, very important. First judgment was of B.T. Patil and Sons versus Commissioner of Gift Tax Act, wherein para 6, what Supreme Court observed. Supreme Court said that in our view, whenever there is a dissolution of partnership or whenever partner retires and obtains in lieu of his interest in the firm an asset of the firm, his share against that he will get the asset, Supreme Court clearly mentioned that no transfer is involved for the reasons set out in a paragraph quoted above. There was a long discussion in this judgment in paragraph number 5. But Supreme Court concluded that dissolution retirement would not result into a transfer. Similarly, Supreme Court, in case of Jagatram Ahuja versus Commissioner of Gift Tax, Supreme Court referred the income tax matter of Malabar Fisheries, where Supreme Court says that when we discuss Malabar Fisheries and the issue was of dissolution and retirement, we referred many decisions. And we concluded that this kind of transaction, when there is a dissolution of the firm, it would not amount to transfer. Even within the meaning of Income Tax Act, you can see, this was the paragraph I picked up from the judgment of Supreme Court under Gift Tax Act. But where they referred the judgment of Income Tax Act, that even if you look at definition of transfer under section 2, clause number 47, then also this is not a transfer. The idea is, again, repeatedly I am telling, partner is not extinguishing or giving up anything in favor of remaining partner or continuing partner. He is taking out what he has invested. That is what Supreme Court had said. In short, it is not a transfer. Dissolution would not amount to transfer. So that is very, very important judgment of Supreme Court. That was followed by Allahabad High Court in case of Surendra Kumar Gupta, where the facts were assets of the firm were taken over by one of the two partners. So there were only two partners, and one partner had taken away all the assets at the agreed amount. That's why there was a complete dissolution of the firm, because there was a dissolution and one partner had taken over the entire asset of the firm. The question before the Allahabad High Court was that whether finding of the tribunal, the transaction is not a transfer, is legally correct, and whether tribunal was correct in deleting the addition of capital gain made by the income tax officer. In para 11, Allahabad High Court had discussed in detail, and para 11, Allahabad High Court held that in foregoing discussion, we are of the considered opinion that tribunal was justified in holding that transaction is not a transfer, and that's why no capital gain accrued to the SSC. And therefore, we answer both the questions in favor of SSC and against the revenue. In short, consistently it has been held, despite section 45(4) is there, despite this law is old, an old judgment I'm referring, but recently also the courts are very clear that dissolution and retirement would not result into a transfer. And if there is no transfer, then there is no need to refer section 45(4). because 45.4 is a calculation machinery. It is not a charging section. If in charging section SSC succeeds, then machinery section or calculation machine section is of no use to the department. So practically there is no capital gain here. Now next question we may have, that whether admission of a partner would constitute transfer under the Income Tax Act. That would be definitely a big question in our mind, that whether admission result into a transfer, because in admission what will happen, the remaining partner's share may get reduced proportionately or whatever they have agreed to the extent of the share of the incoming partner. The question was, before the Karnataka High Court and Kerala High Court, I have covered two judgments. Both judgments are of year 2012. Let me refer Karnataka High Court. Karnataka High Court concurred with the view of lower authorities. And what was the view of lower authority? That none of the provision of the Act envisages a situation when capital gain would be chargeable on account of reduction in share of partnership in a firm by way of an introduction of no partner. The Karnataka High Court clearly said that we are in agreement with Tribunal, Commissioner Appeal, that there cannot be a capital gain when there is a reduction in the share of remaining partner because of introduction of new partner. That means admission would not result into a. This case is very interesting. I request every participant to look into this. In this, there was a debate by the department or the department contested further that this is more of a tax planning device and this is an artificial device created. On that also, Karnataka High Court had wonderfully made observation and concluded that merely because business was not conducted post reconstitution, one cannot hold that firm is not genuine and transaction is mere device transaction. That was also the conclusion reached by the Karnataka High Court. Another judgment that was rendered by Kerala High Court in case of Kunamkulam Mill Board. It was a 2002 judgment, I'm sorry, it was not 2012. In para 13, what court held that in view of the Katena decision rendered, we are of the view that whenever partnership get reconstituted by adding new partner, there is no transfer within the meaning of, you can see section 45(4) of the Income Tax Act. And that's why the question formulated is answered against the revenue and in favor of SSC. Just I briefed with the help of decided case laws. The courts are very clear. Despite section 45(4) is on statute, it is of no use because neither admission, nor dissolution, nor retirement would result into a transfer by a partnership firm in favor of a retiring partner or an outgoing partner. Or there is no transfer by incoming partner, by existing partner in favor of incoming partner in the form of reduction in sharing profit ratio. So this is what clearly courts have held. Now let us look at what Finance Act 2021 had done the amendment. Let me share my slide again. Pay attention. Now we are moving towards part B, that is retrospective amendment by Finance Act 2021. This is again very interesting that this has been made retrospective, applicable for our current assessment year for which we are filing returns or we are preparing returns. As such, we are all waiting that once the income tax website would be in order perfectly. So this is a retrospective amendment introduced by Finance Act 2021. There are three important sections emerging from this. One is section 9B, that is newly inserted by Finance Act 2021. Section 45(4), that has been completely substituted when budget got finally approved. And there was slight insertion of new clause number 3 under section 48. All these three are dealing when there is a reconstitution or somewhere a dissolution of partnership firm. Three words they've used, or AOP or BOI. I will slightly be in a lower pace while dealing with these provisions. So there are three words used, firm, AOP and BOI, whenever they transfer money or property to whom their partners, if it is a partnership firm, and if it is AOP BOI, then transfer is being made to whom? Members. Then in that case, how section 9B would be applicable, how section 45(4) would be applicable, and how calculation is going to be done, that we will discuss in detail. But let me look at, first of all, section 9B. Very interesting. I have already said that I will keep very slow pace because they are very overlapping provision. Subsection 1, what it says? It says that where a specified person, so whenever the word specified person is being there, you should read it as a partner or a member. So wherever a specified person receives any capital asset or stock in trade or both, pay attention on screen. Whenever a partner or a member receives capital asset or stock in trade or both from an entity, whenever the word specified entity is being used, you should take it as a partnership firm or AOP or BOI. In short, partner is receiving some asset or a stock in trade or both. Why? Why is receiving? Two words are used, either because of dissolution or because of reconstitution. Then that entity that is called partnership firm for our ease of reference, partnership firm shall be deemed to have transferred. Mind, pay attention here. Deemed to have transferred such capital asset or stock in trade, as the case may be, in the year in which such capital asset or stock in trade or both are received by the partner. In short, what section 9B1 says? 9B1 says whenever there is a, two words they have used, whenever there is a reconstitution or a dissolution. And let us, for sake of simplicity, take it the case of partnership firm. So whenever there is a reconstitution or dissolution of partnership firm, and at a time of such reconstitution or dissolution, firm hands over either capital asset or stock in trade or both. I repeat, what firms hand over? Either capital asset or stock in trade or both. To whom? That partner. Then the wordings used where it is a deemed transfer. I repeat, the wordings used where it is a deemed transfer and firm is liable to pay tax in the year in which partner received that capital asset or stock in trade. So that is section 9B1. So when section 9B1 is attracted, first condition is there should be a firm or AOP or BOI. Second condition, there should be a reconstitution or dissolution of the partnership firm or AOP or BOI. Third condition, either stock in trade or capital asset is being handed over to the partner. If these conditions are being satisfied, then there is a deemed transfer in view of subsection 1 of section 9B of the Act. I think you are clear up to this. Now a question may arise, sir, what does reconstitution means? So let me first of all share the screen about the meaning of reconstitution. Pay attention. Look at meaning of reconstitution. There is an explanation appended to section 9B. What this explanation reads: reconstitution means where one or more partners or members of partnership firm ceases to be partners. That means one or more partners ceases to be partner. This envisages two situations. One is death, where person ceases to be partner, or another is retirement. Another is retirement. So whenever there is a death in a partnership firm, the death of a partner, or whenever there is a retirement of a partner from the partnership firm, then it is called a reconstitution. Second part of the definition says, explanation says, one or more new partner got admitted. One or more new partner got admitted, and one or more partner who were before change will continue at least as a partner after change. The idea is that one or more partner is admitted, one or more may retire, but at least one partner before change shall continue as a partner after change. Then also it is called a reconstitution of the partnership firm. In short, it is called admission, would also consider as reconstitution. Admission come retirement with a condition, one partner should remain common, that is before change will continue as a partner after change. Then it is called reconstitution. And third clause says, all partner will continue, but there is a change in their respective profit sharing ratio. So all partner will continue with a change in a profit sharing ratio. Then it is also called a reconstitution of the firm. So I think you got the clarity. Section 9B is attracted when either dissolution or a reconstitution. The reconstitution includes death, retirement, admission, or even change in profit sharing ratio. Now let us read section 9B2, what it says. 9B2 says, any profits and gains arising because of deemed transfer. They're repeatedly writing under the act that this is a deemed transfer, because Supreme Court already said it is not a transfer. That's why they have artificially written the word, there is a deemed transfer. It says that any profits and gains arising from deemed transfer of either capital asset or stock in trade shall be deemed to be the income of the firm in the previous year in which such asset or stock in trade were received by the partner. And number 2, it is chargeable to income tax under the head business profession or capital gain, as the case may be, or even both. What it would like to 9B2 says that whenever you fall under 9B1, then there is a deemed transfer, and it is the firm who is required to pay tax. Under which head? If stock in trade is given to the partner, then head business profession is going to be attracted. If capital asset get transferred, then head capital gain will be attracted. So that is a very simple clarity they have given under 9B2. Now a question may arise, how to measure that capital gain? And to measure capital gain or business gain, we need a sales consideration so far as business gain is concerned. And when we look at capital gain, we require full value of consideration. Let me share the screen. Look at what 9B3 says. (9B3) says here, subsection 9B3, that for the purpose of this section, fair market value of capital asset or stock in trade or both, whenever partner receives that day, whatever the fair market value is there, it is deemed to be the full value of consideration. In short, they have clarified that fair market value on the date of receipt of capital asset or stock in trade by the partner, that will be taken as sale consideration to measure the capital gain or business gain. Not only that, subsection 4 further clarified that if any difficulty will arise in giving effect to the provision of this section, then board will come out with a guideline with the approval of central government to remove that difficulty. And whatever guideline they will come out, it will be laid before each house of the parliament, and it will be binding to the income tax department as well as to the taxpayer, that they have clarified. So in short, section 9B1, I hope you got clarity. You should remember, I am repeating, and I have reduced my pace to deliver this lecture. The reason is you should be clear. When 9Bs get attracted, there should be a firm. We are taking example of firm. Whenever I speak firm, you should include AOP as well as BOI. So there should be a firm. Second, there should be a dissolution or a reconstitution of the firm. Third, upon dissolution, reconstitution, either capital asset or stock in trade or both get transferred. If these 3 conditions being satisfied, then section 9B get attracted in the form of deemed transfer. They will use the word deemed transfer. And how to measure capital gain or business gain? To measure capital gain or business gain, they have said that you take it fair market value as a sale consideration or full value of consideration. So this is very simple way 9B they have made it clear to us. Now let us look at section 45.4. Pay attention on screen. What it says. It says that notwithstanding anything contained in subsection 1, they said you forget 45.1. To that extent, it has got overriding effect. Whenever specified person, whenever I read person, you should understand partnership firm. Sorry, whenever I read word person, you should understand word partner here. And whenever I read word entity, they have defined entity means it is a firm or EOP or BOI. So let me read 45.1. It says that whereas specified person receives during the previous year any money or capital asset or both from a specified entity in connection with a reconstitution of such specified entity, then any profits and gains arising from receipt of such money by a specified person shall be chargeable to tax as an income of entity under the head capital gain, and it is deemed to be the income of the entity in the year in which money or capital asset or both got received by that specified person. Notwithstanding anything contrary contained in the act, such profits and gains shall be determined in accordance with following formula, namely A is equal to B plus C minus D. So this is 45.4. Let me read again. There are many other aspects of 45.4. What it says here, whenever partner receives, now pay attention on screen for a while. What he receives, the wordings written are money or capital asset or both. Pay attention. 45.4 get attracted when either money is received or capital asset is received or both. Try to understand what stock in trade is not written here. Stock in trade is written under which section? Section 9B. When we come to 45.4, either money got received or capital asset or both got received, then 45.4 may come into picture. Let me read again what it says further. Pay attention. When this money or capital asset is being received at a time of reconstitution of entity. Pay attention. At a time of reconstitution. Mind, please pay attention here. Dissolution word is not there. The 45.4, earlier 45.4, before amendment was made applicable to dissolution also. But new 45.4 only covers reconstitution. So this is a big change. It only covers reconstitution. Then it says capital gain will be chargeable in the hands of partnership firm in the year in which money or capital asset or both got received by the partner. And how calculation is being done? A is equal to B plus C minus D. So I think you got clarity here. When 45.4 will not be applicable, let us understand. Number one, it won't be applicable when there is a dissolution. Number two, it won't be applicable when there is a distribution of only stock in trade. You got the point. Suppose somebody retires and you give him only stock in trade, then 45.4 won't be applicable. Why? Because they have written the word either cash is being paid or capital asset is being given or both are given. So if you want to escape 45.4, then what you can do is you can give stock in trade at the time of settlement if suppose somebody retires. Just I'm sharing. So that is the only way out that one can get rid of section 45.4. Otherwise, if you settle partner's account with the help of money or if you settle partners account with the help of capital asset or combination of both, then if there is a reconstitution, section 45(4) will come into picture. Let me read again what 45(4) further says. Pay attention. It says computation shall be done in the form of formula, that is A is equal to B plus C minus D. A is nothing but the capital gain. How capital gain is being worked out? B plus C minus D. What is called B? B here is money received by the partner. Money received by the partner. What is called C? Fair market value of asset received by the partner. So whatever partner receives at the time of reconstitution, if money is received, then there is money. That is called B. So whatever money is received, that plus what we need to add? We need to add fair market value asset given to the partner. So money plus fair market value of asset given to the partner. From that, D is reduced. What is called D? Whatever is the balance of a partner in a capital account at a time of reconstitution. The mechanism is very simple. What it says, what you are giving to partner, either at a time of reconstitution, what you are giving to partner. If you are giving to partner money, then take that money. If you are giving asset, then take the fair market value of asset, make a total of them. Suppose somebody retires from a partnership firm, let us assume, and he is being paid rupees 20 lakh, check, and he has been given some asset, the market value is 30 lakh. Then you should make a total of 20 plus 30. So what was given to partner? 20 lakh cash or check and 30 lakh value of asset, total is 50 lakh. Now from that you reduce the capital balance of that partner at a time of retirement. Let us assume capital balance at a time of retirement is 22 lakh. So total you are giving him 50 lakh and his capital balance is 22 lakh. So what was the resultant gain? The resultant gain is 28 lakh. That will be taxable in the hands of partnership firm under section 45(4). Now you will have a question in your mind. Sir, section 9B also get attracted. Section 9B is attracted when there is a reconstitution and when capital asset is given. So in my example, capital asset worth market value of 30 lakh is given. So section 9B also get attracted, and section 9B says you compute capital gain as per chapter capital gain. So then I have to compute another capital gain under section 9B as well. So does it not amount to a double taxation for the same transaction? That question might be going in your mind. Then that would be a perfect issue which is you are right now having debate in your mind. So let me read further what section 45(4) says. Some question is there on chat box that will be automatically answered when we read further what section 45(4) says. Let me read 45(4) again. It further says, suppose B plus C minus D is becoming negative. Suppose that answer is coming negative. Then capital gain is deemed to be 0. अगर लॉस हुआ तो लॉस का बेनिफिट पार्टनरशिप फर्म नहीं ले पाएगी. यहां भी डिबिंग फिक्शन डाल दिया कि अगर फर्म को लॉस हुआ, यानी जैसे मैंने एग्जांपल दिया 20 लाख रुपए चेक दिया आपने, 30 लाख की एसेट दी, यानी कितने दिए 50 लाख, और पार्टनर की कैपिटल बैलेंस है 60 लाख रुपए, तो वैल्यू आई नेगेटिव आई तो फर्म कैन नॉट क्लेम एज अ लॉस. व्हाट लॉ प्रोवाइड्स? दैट वैल्यू शैल बी डीम्ड टू बी 0. क्लियर? फिर आगे बढ़े. Now a question may arise. Suppose example I have taken, cash given is 20 lakh, asset value is 30 lakh, and capital balance I have taken 22, and I said that 28 lakh would be taxable. Now one may think, sir, this 22 जो capital balance है उसको तो हम जगलरी कर ही सकते हैं by doing revaluation, upward revaluation. Then they have also clarified that part. one proviso has been inserted. It says that balance in capital account is to be calculated without considering increase in the capital account due to revaluation of asset, or even due to self-generated goodwill, or even any other self-generated asset. So they know that we are more powerful and intelligent. That's why they have written a proviso. जो capital balance है, अगर वो capital balance because of upward revaluation of asset inflate हुआ है, तो उसको आपको ignore करना है. That they have clarified. अगर capital gain की amount negative आ रही है, तो उसको भी ignore करके capital gain क्या लेना है? Nil लेना है. That is what they have said under section 45(4) itself. Reconstitution का definition already हम पढ़ चुके हैं, वही है. They also define self-generated goodwill and self-generated asset. So now what happened here? That there are now two sections we need to deal with. One is 9B and section 45(4). Let me first of all make it clear again and again. I am keeping my pace very slow because we have got a bombarding CBDT circular and the wonderful notification from the CBDT. Circular is explaining that notification as well as the operational part of section 45(4) and section 9B. Before I jump to part 3, let me discuss some comparison between these two sections. Pay attention. Section 9B and 45(4). Kindly pay attention for a while. What is the subject matter of transfer under 9B? Then there are two subject matter, either capital asset or stock in trade, or both. Both is always there. Either capital asset get transferred or stock in trade get transferred. When we look at 45(4), the wordings used are capital asset or cash. The word used are capital asset or cash. Now, which event will trigger chargeability? So if we read 9B, then they have said the wordings used are either at a time of dissolution or at a time of reconstitution. But when we look at 45(4), it will trigger taxation only when there is a reconstitution. So remember, 45(4) will come into picture only when there is a reconstitution. Now, if you look at this chart, what is coming common, that I will make it trade, what is coming common is capital asset. And what is coming common is reconstitution. In short, what is the outcome? When there is a reconstitution and when there is a capital asset being transferred, then both the section would be applicable. And just I said, they have clarified as well. Let me share that explanation. They have given the explanation to section 45(4). And what explanation 2 says, whenever capital asset is received by the partner from the firm in connection with the reconstitution, provision of the said section shall operate in addition to 9B. That means 45(4) will operate in addition to section 9B. That they have made it clear. That means there is a double taxation and we have to work out capital gain independently under both the provision. So I think this would be clear. How capital gain would be calculated under 9B. Then computation mechanism is you take it fair market value as a full consideration, and then you go to business gain or capital gain. When you come to 45(4), mechanism is given in the form of formula A is equal to B plus C minus D. Now, because of double taxation, they made some amendment in section 48. What it says, clause number 3, that capital gain chargeable tax under 45(4), जो 45(4) वाला capital gain है, and which is attributable to capital asset being transferred by the firm, it shall be reduced while computing capital gain in the hands of firm. It's very confusing. And capital gain attributed to such capital asset shall be computed in a prescribed manner. तो apparently and honestly ये जब आया था बजट को लेकर, मैंने भी भोपाल में लेक्चर दिया था, भोपाल ब्रांच में. वेरी नेक्स्ट डे, आई थिंक इट वाज द फर्स्ट सेशन in India on budget, very next day morning, 10 to 12. And I intentionally and purposefully and requested the audience that I will not comment on 45.4 because it is very confusing and no clarity is coming unless prescribed manner will be revealed to us by way of notification or circular. Till that time, it is something too early to comment on how 45.4 will operate in addition to section 9B. And accordingly, at the time, I requested participants that I will come back to you for this same session when guidelines will come. When I conducted, I think in the month of July, 31st July, I think I conducted last lecture there, 31st July or somewhere, 30th July. Now we are in receipt of one guideline in the form of rules that how to compute capital gain and how to appropriate capital gain and what is the nature of that capital gain, whether it is long term or short term. So there's two rules. They are very confusing, very confusing. It requires high attention. Some of the members are already finding difficult, but it requires high attention. That's why continuously I am sharing screen. And in between, I am keeping my pace slow and I am repeating the words again and again. So I think you got the clarity that 9B and 45.4 both will come into picture when there is a reconstitution and there is a transfer of capital asset. Only in that event, both sections get triggered, and then we need to see that how attribution would be done and how to determine the nature of capital gain. Pay attention on screen. There is a circular of CBDT, circular number 14, 2021, and there is a notification 76, 2021. If you look at, first of all, notification, 2nd July, dated 2nd July. In notification, they inserted rule 8AA. More particularly, they inserted sub-rule 5 under rule 8AA. The rule 8AA is already there, which determines the nature of capital asset. And they clarified here that in certain situation, the gain would be deemed to be, the gain under 45.4 shall be deemed to be short term. If you can attribute to these three assets, capital asset which is short term when 45.4 get attracted, capital asset which is a part of block, or capital asset which is in the form of goodwill or other self-generated asset, then in that event, there is a deeming provision under rule 8AA5 that it would result into a short-term capital gain. If it will not fall in that, then it is called long-term capital gain, which is natural. If you cannot cover under clause 1, this clause, then gain would be a long-term gain. Now, if you read the word, they are using the word attributed. Then how to do such attribution? For that, they have inserted new rule called 8AB, a very complicated rule they introduced. And thank God that they came out with a CBDT circular explaining this rule 8B. And in rule 8B, they have given entire rule and format. A form number 5C has been inserted. It is not spicy, it is 5C, which is emerging because of rule 8AB. And in this form, they have given the attribution table, that how to prepare an attribution table. Clear? So this is very, very important. And in this form, you need to also give the name and registration number of a valuer based on whose valuation report you have done, you found the fair market value. This is something interesting, and this is a self-certified form. This form need to be filed whenever there is a reconstitution or the dissolution of the partnership firm. Sorry, whenever there is a reconstitution of the partnership firm and 45(4) get attracted. Now, I am not reading in detail, because I'll read in detail. Definitely 200 plus members are attending me. Within 15 minutes, 50% will run away if you read the CBDT circular and notification. That's why what I did in the CBDT circular, I have converted into tabular form. In the same CBDT circular, they have given 3 examples. All the 3 examples are very interesting from the CBDT. So I am just sharing each of the examples. I request all the participants to pay attention on screen. First of all, let us take it first example given by the CBDT, explaining the operational part of the section 9B as well as 45(4) and how double taxation is being mitigated. That CBDT has clarified. Pay attention. It says, example assumes that there are 3 partners having equal share, A, B, and C, having equal capital as well. And total capital is 30 lakh, which is represented by these 3 assets. It seems it's a partnership firm of Gujarati people. तो सब लोगों ने लैंड में इन्वेस्ट किया, लैंड S, T and U, जिसकी बुक वैल्यू है 10-10 लाख रुपए और बैलेंस शीट बहुत छोटी सी है 30 लाख रुपए की. और जो तीनों एसेट हैं S, T और U, they are long term asset. When partner A wants to retire, so here the event taking place is retirement of a partner. Retirement of a partner is nothing but a reconstitution. That's why section 9B is applicable as well as 45(4) will be applicable. But to apply 9B and 45(4), we need to see capital asset must have been transferred by the firm to the retiring partner. So let us read that when retirement took place, the valuation was done. Land S and T, उसकी मार्केट वैल्यू 10 के सामने 70 लाख है, ठीक है. और जो लैंड यू है उसकी मार्केट वैल्यू 50 लाख है. That has been given in the practical that market value of land S and T is 70 lakh and land U is 50 lakh at a time of retirement. अब उन्होंने कुछ वैल्यूएशन किया और जो रिटायरिंग पार्टनर है उसको उन्होंने तय किया कि 61 लाख रुपए दिए जाएंगे. कितने? रिटायरिंग पार्टनर जो ए है उसका अकाउंट सेटल किया जाएगा बाय मेकिंग पेमेंट ऑफ 61 लाख रुपए. और उन्होंने तय किया कैश देंगे उसमें से 11 लाख रुपए. और जो लैंड यू थी जिसकी मार्केट कीमत 50 लाख थी, वो लैंड यू उन्होंने दे दी. किसको? रिटायरिंग पार्टनर ए को. और जो लैंड यू जो है उसकी इंडेक्स कॉस्ट भी उन्होंने एजम्पशन में दे दी है कि 15 लाख रुपए है. So this is a very simple sum which CBDT has given in the form of example. What CBDT said? It said that there is a reconstitution. That's why, and there is a distribution of capital asset of land U. यानी क्या होगा? दोनों सेक्शन एप्लीकेबल होगी. 45(4) भी एप्लीकेबल होगी और सेक्शन 9 भी एप्लीकेबल होगी. अब सेक्शन 9 भी याद करें. सेक्शन 9 भी क्या कहती है? जो लैंड ट्रांसफर की गई है पार्टनर को, उसकी आप क्या निकालें? फेयर मार्केट वैल्यू निकालें और उसमें से आप उसकी इंडेक्स कॉस्ट माइनस करें. यू शुड गो टू चैप्टर कैपिटल गेन और कैपिटल गेन टैक्स तय करें. तो लेट मी शेयर द स्क्रीन व्हाट CBDT circular had done. They have written the entire circular in narrative form. Let us look at now various implications of this transaction when one partner retires. The implication number 1, जो भी FMV है, that would be taken as sale consideration because of section 9B. Index cost आपको 15 लाख दी गई है, 50 में से 15 घटाओगे, तो there would be a long-term capital gain बिकॉज लैंड यू इज ए लॉन्ग टर्म कैपिटल एसेट। तो 35 लाख रुपए लॉन्ग टर्म कैपिटल गेन हुआ कौन सी सेक्शन के अंतर्गत? सेक्शन 9B के अंतर्गत। ठीक है, यहां तक। अब पे अटेंशन, सीबीडी का सर्कुलर आगे क्या करता है कि इस 35 लाख पे वो टैक्स निकालता है, टैक्स, और उन्होंने टैक्स रेट एज्यूम किया बिकॉज इट इज लॉन्ग टर्म कैपिटल एसेट। तो एलटीसीजी को लेकर सेक्शन 112 में टैक्स लगता है 20%। तो दे कैलकुलेटेड 20%, और उन्होंने स्पेसिफिकली लिखा है सर्कुलर में कि अभी हम सरचार्ज और एजुकेशन सेस को हम इग्नोर करते हैं फॉर सेक ऑफ सिंप्लिसिटी। ठीक है, तो 35 लाख पे इनकम टैक्स कितना आएगा? 20% के हिसाब से इनकम टैक्स आएगा 7 लाख रुपए। फिर सीबीडीटी ने जो काम किया है बहुत इंटरेस्टिंग है। फिर सीबीडीटी ने पार्टनर का कैपिटल अकाउंट बैलेंस निकाला है एट अ टाइम ऑफ रिटायरमेंट, यानी ट्रांजैक्शन रिटायरमेंट में खत्म होने के बाद पार्टनर का कैपिटल बैलेंस क्या बनेगा? दैट वर्किंग दे हैव डन। उन्होंने पहले बुक प्रॉफिट निकाला। क्या निकाला? ध्यान से देखें, उन्होंने क्या निकाला? पहले बुक प्रॉफिट। कैसे निकाला बुक प्रॉफिट? तो कि भाई लैंड यू जो है उसकी कीमत कितनी है? 50 लाख, जो पार्टनर को दी जा रही है, रिटायरिंग पार्टनर को। उसी लैंड यू की कॉस्ट क्या है? देखिए आप बैलेंस शीट में, लैंड यू की कॉस्ट क्या है बैलेंस शीट में? देखिए 10 लाख रुपए। ठीक है, तो मार्केट कीमत है 50 लाख और बुक वैल्यू है एज पर बुक्स 10 लाख। तो बुक प्रॉफिट कितना आया? 40 लाख रुपए। ठीक है, एट टाइम ऑफ रिटायरमेंट। लेकिन जब ये एसेट देंगे तब आपको सेक्शन 9B में टैक्स देना पड़ेगा। और सेक्शन 9 में कितना टैक्स देना पड़ेगा? तो हमने अभी ऑलरेडी कैलकुलेट कर लिया। कितना? 9B में 35 लाख पे 20%, 7 लाख रुपए। तो उतना टैक्स देना पड़ेगा, वो प्रॉफिट में से माइनस होगा 40 लाख में से, बुक प्रॉफिट में से। तो नेट प्रॉफिट बचेगा आफ्टर टैक्स, दैट वुड बी 33 लाख। ठीक है, उस 33 लाख का बंटवारा होगा तीनों पार्टनर के बीच में। और हमने देखा कि तीनों इक्वल पार्टनर है, यानी एक एक पार्टनर को 11 लाख मिलेगा प्रॉफिट। ये प्रॉफिट समझ में आ रहा है? मार्केट वैल्यू एसेट, वैल्यू ऑफ एसेट एज पर बुक्स, देयर इज एन अकाउंटिंग प्रॉफिट। उस अकाउंटिंग प्रॉफिट में से उन्होंने जो टैक्स लायबिलिटी थी उसको माइनस किया। देन देयर विल बी नेट अकाउंटिंग प्रॉफिट ऑफ 33 लाख जो उन्होंने बंटवारा किया पार्टनर के बीच में। अब पार्टनर की कैपिटल क्या थी? बैलेंस शीट में देखिए, हर एक पार्टनर की कैपिटल क्या थी? 10-10 लाख रुपए। उसमें 11 लाख आप जोड़ दें, 11 लाख जोड़ दें, तो आफ्टर रिटायरमेंट, पहला पार्टनर तो निकल गया है, आई एम सॉरी, बट एट द टाइम ऑफ रिटायरमेंट सब पार्टनर की कैपिटल क्या बनेगी? 21 लाख रुपए, बिकॉज देयर इज अ 33 लाख प्रॉफिट। दिस इज व्हाट सीबीडीटी सेज, आई एम नॉट डूइंग एनी कैलकुलेशन। ठीक है, तो यहां तक क्लियर? कोई कंफ्यूजन? नाउ व्हाट विल बी द इंप्लीकेशन अंडर 45(4), क्योंकि 45(4) भी एप्लीकेबल होगी। तो 45(4) की फॉर्मूला क्या थी? B plus C minus D. Let us take it, this is a B, this is a C, and this is a D. This is called B, C, and D. ठीक है, तो अब ध्यान दें, B का मीनिंग क्या था? पार्टनर को जो पैसे दिए जा रहे हैं, तो पैसे कितने दिए जा रहे हैं? 11 लाख। C का मीनिंग क्या था? पार्टनर को जो एसेट दी जा रही है उसकी FMV। तो पार्टनर को दिया जा रहा है लैंड यू, उसकी FMV कितनी है? 50 लाख। दोनों का क्या करो आप? टोटल करो, 50 + 11 यानी हुआ कितना? 61। उसमें से क्या माइनस करना है? उसमें से माइनस करना है उसका कैपिटल बैलेंस। और कैपिटल बैलेंस हमने क्या निकाला अभी ऊपर? 21 लाख, क्योंकि प्रॉफिट ऐड हो जाएगा। प्रॉफिट क्या हो जाएगा? ऐड हो जाएगा। तो उसका कैपिटल बैलेंस कितना है? 21। तो 21 जो उसका कैपिटल बैलेंस हमने निकाला, 10 में से 11 प्रॉफिट ऐड करके, वो माइनस करना है। Then there would be a capital gain under section 45(4), and that capital gain is 40 lakh rupees. I know that you got exhausted. तो उन्होंने पहला काम क्या किया, सेक्शन 9B का कैलकुलेशन किया. नंबर 1, 9B पे उन्होंने जो कैपिटल गेन आया 35 लाख रुपए, उसके ऊपर टैक्स निकाला. नंबर 2. नंबर 3, फिर उन्होंने बुक प्रॉफिट निकाला, और बुक प्रॉफिट कैलकुलेट करते वक्त उन्होंने टैक्स को घटाया. फिर जो नेट प्रॉफिट आया उसका प्रोपोर्शनेट हिस्सा पार्टनर के हाथ में ऐड किया उस कैपिटल के साथ, और फिर जो बैलेंस आया कैपिटल का उसको उन्होंने 45(4) में कंसिडर किया और कैपिटल गेन तय किया. तो 45(4) की फॉर्मूला बहुत सिंपल है. जो पैसे मिल रहे हैं वो, जो एसेट मिल रहे हैं उसकी एफएमवी, दोनों को आप जोड़ दें और उसमें से कैपिटल बैलेंस जो है एज ऑन रिकंस्ट्रक्शन उसको आप घटा दें. तो आई थिंक यहां तक कोई दिक्कत नहीं है. लेकिन ध्यान से समझें कि जो 9B थी उसमें हमने वैल्यू ली थी लैंड ड्यू की 50 लाख, और जो 45(4) थी उसमें भी हमने वैल्यू ली थी 50 लाख. यानी उस लैंड के ऊपर दोनों सेक्शन में टैक्स हो रहा है. वो तो क्लियर हो रहा है आपको. और उन्होंने लिख भी दिया है एक्सप्लेनेशन 2 में कि दोनों जो प्रोविजन है उसके अंदर हम टैक्स लेंगे और डबल टैक्सेशन है. इसलिए आप चिंता मत करें, हम सेक्शन 48 में कुछ आइडिया निकालेंगे. लेकिन उसके पहले सवाल ये उठेगा कि जो 45(4) में हमारा जो एग्जाम्पल है उसके अंदर जो कैपिटल गेन आया, वो कैपिटल गेन जो 40 लाख आया, ये 40 लाख जो है वो शॉर्ट टर्म है या लॉन्ग टर्म है या दोनों है? हाउ टू डिसाइड दैट? Then they said that depends on attribution of capital gain as per rules. Do you recall that rules just I referred? तो अब एट्रीब्यूशन कैसे करना है हमने एक पूरा फॉर्मूला देखा था. तो एट्रीब्यूशन कैसे करना है ध्यान से समझें. बहुत कॉम्प्लिकेटेड वे दे हैव ड्राफ्टेड दिस. पे अटेंशन. एट्रीब्यूशन करना है, ये जो लॉ में लिखा है उससे एग्जैक्टली ऑपोजिट लिखा है. अगर आप 45(4) में पढ़े तो ऐसा नहीं लिखा है. यहां लिखा है एट्रीब्यूशन करना है कंसीडरिंग रिमेनिंग एसेट ऑफ द फर्म आफ्टर रिटायरमेंट. आई रिपीट, जो भी 40 लाख है उसका बंटवारा करना है अमॉन्ग रिमेनिंग एसेट. I'll come to that. पहले एट्रीब्यूशन समझ लेते हैं. अब रिमेनिंग एसेट कौन सी है? तो हमारी बैलेंस शीट याद करें. बैलेंस शीट में 3 एसेट थी, लैंड एस, लैंड टी, यू. जहां तक एस का सवाल है वो तो पार्टनर को दी गई, ठीक है, पार्टनर को दी गई. तो रिमेनिंग एसेट कौन सी बची? लैंड टी एंड यू. आई एम सॉरी, लैंड यू हैज बीन गिवन. तो रिमेनिंग एसेट इज लैंड एस एंड टी. आई एम सॉरी, लैंड यू हैज बीन गिवन टू पार्टनर. तो रिमेनिंग एसेट कौन सी बची? लैंड एस एंड टी. अब लैंड एस एंड टी जो है उसकी बुक वैल्यू आप देखिए 10-10 लाख है, और उसकी एफएमवी क्या है? 70 लाख रुपए. कितना है? 70 लाख. तो अब वो बोल रहे हैं कि जो 40 लाख कैपिटल गेन हमने निकाला 45(4) में बी प्लस सी माइनस डी करके, ये जो 40 लाख रुपए हमने कैपिटल गेन निकाला बी प्लस सी माइनस डी करके, ये 40 लाख कैपिटल गेन हमें एट्रीब्यूट करना है लैंड एस और टी के बीच में. कौन से प्रोपोर्शन में? तो उनकी जो मार्केट वैल्यू है उसमें जो बढ़ावा हुआ उस प्रोपोर्शन में. तो उनकी बुक वैल्यू थी 10-10 लाख और मार्केट वैल्यू 70 लाख, तो बढ़ावा हुआ 60-60 लाख, यानी प्रोपोर्शन है इक्वल. तो 40 लाख इक्वली हम क्या करेंगे? लैंड एस और टी के बीच में एट्रीब्यूट करेंगे. अब सवाल ये उठेगा, सर ये क्या चक्कर है, एट्रीब्यूशन क्यों करवा रही है? तो उन्होंने लॉजिक क्या लगाया, ध्यान से समझे, लॉजिक समझे उनका. 45(4) की फॉर्मूला क्या है? पार्टनर को जो दिया जा रहा है वो, उसमें से उसकी कैपिटल बैलेंस माइनस करो. इसका मतलब ये हुआ कि पार्टनर को कैपिटल बैलेंस से कुछ ज्यादा दिया जा रहा है. तो भाई पार्टनर को जो उसकी कैपिटल दिख रही है उससे ज्यादा क्यों दिया जा रहा है? उससे ज्यादा इसलिए दिया जा रहा है कि पार्टनरशिप फर्म की बाकी कुछ एसेट है, वो एसेट की मार्केट कीमत ज्यादा है, बुक वैल्यू से ज्यादा है, इसलिए उस पार्टनर का हिस्सा ज्यादा बन रहा है. इसलिए उसका जब बुक में कैपिटल है उससे हम ज्यादा पेमेंट कर रहे हैं। तो वो जो एक्स्ट्रा पेमेंट कर रहे हैं वो उस वजह से है कि जो फर्म में कोई दूसरी एसेट है जिसकी मार्केट कीमत ज्यादा है, इसी वजह से पार्टनर को ज्यादा पेमेंट दिया जा रहा है। इसलिए वो जो कैपिटल गेन 45(4) में आया वो रिमेनिंग एसेट को लेकर है। दैट इज व्हाट द आइडियोलॉजी दे हैव अप्लाइड व्हाइल ड्राफ्टिंग नोटिफिकेशन। अब समझ में आया 20-20 लाख एट्रीब्यूट हो गया। अब ये 20-20 लाख का नेचर क्या हुआ? तो लैंड एस और टी दोनों क्या थी हमारे एग्जांपल में? दोनों लॉन्ग टर्म थी। दोनों लॉन्ग टर्म थी इसलिए उन्होंने बोल दिया कि कैपिटल गेन इज आल्सो व्हाट? लॉन्ग टर्म अंडर 45(4) नंबर 1। तो यहां तक क्लियर हुआ? लेट मी सम अप वंस अगेन because some of the members are now not able to keep their interest because of these online lectures and even maybe because of my not much ability to explain. पहला हमें क्या करना है? जब दोनों सेक्शन अप्लाई होती है तो पहले 9 भी लगानी है, उसके ऊपर टैक्स निकालना है, फिर हमें कैपिटल बैलेंस निकालना है आफ्टर टेकिंग इनटू अकाउंट द बुक प्रॉफिट। ठीक है, फिर हमें 45(4) का कैलकुलेशन करना है, B + C - D। फिर जो 45(4) का कैपिटल गेन आया है उसको हमें रिमेनिंग एसेट पे एट्रीब्यूट करना है। और रिमेनिंग एसेट का नेचर क्या है? अगर वो लॉन्ग टर्म है तो ये गेन क्या हो जाएगा? लॉन्ग टर्म। और अगर वो शॉर्ट टर्म है तो गेन क्या हो जाएगा? शॉर्ट टर्म। यहां तक क्लियर? अब एट्रीब्यूट करने का वजह क्या है? तो उनका ये कहना है कि आपने ऑलरेडी डबल टैक्सेशन हो गया आपके ऊपर, क्योंकि आपकी जो एसेट थी वो एसेट लैंड यू, उसके ऊपर डबल टैक्सेशन हो रहा है। इसलिए आप चिंता मत करो। जो 40 लाख हैं जो हमने 20-20 लाख एट्रीब्यूट किए, जब आप फ्यूचर में, आई रिपीट, जब आप फ्यूचर में लैंड एस और लैंड टी बेचोगे, जब आप फ्यूचर में लैंड एस और टी बेचोगे तब 20 लाख रुपए आपको कैपिटल उसकी कंसिडरेशन में से घटाना है। लेट अस एज्यूम कि लैंड टी अगर पार्टनरशिप फर्म फ्यूचर में बेच रही है 80 लाख में, तो फ्यूचर में जब भी बेचेगी तो 80 लाख पे टैक्स नहीं देना है। 80 लाख में से 20 लाख रुपए माइनस करने हैं और सिर्फ 60 लाख रुपए पे टैक्स देना है, क्योंकि लैंड टी का प्रोपोर्शनेट कैपिटल गेन टैक्स ऑलरेडी आप दे चुके हैं जब पार्टनर रिटायर हुआ था। यू गॉट द पॉइंट? तो दिस इज रिटर्न अंडर विच सेक्शन? 48(3). उसी तरह लैंड एस बेचोगे आप, तब भी आप क्या करोगे? जो 20 लाख लैंड एस को लेकर कैपिटल गेन जिसके अब हम 45(4) में टैक्स दे चुके हैं, वो आपको जब लैंड एस बेचोगे उसकी जो वैल्यू आएगी उसमें से 20 लाख कम करना है। तो हियर आइडिया इज दैट वी आर प्रिवेंटिंग डबल टैक्सेशन बाय वे ऑफ रिडक्शन व्हेन इन फ्यूचर यू विल सेल द रिमेनिंग एसेट। आई थिंक यहां तक आइडियोलॉजी बैठी आपके दिमाग में। तो इन शॉर्ट कंक्लूजन ये हुआ कि पार्टनर को 45(4) में जो पैसा ज्यादा मिल रहा है एज कंपेयर टू हिज कैपिटल अकाउंट at the time of retirement, that is because of higher valuation of remaining asset of the firm. Now a question may arise, if there is no asset with the firm, then what to do? Then they have made a presumption in another example that in that situation you take it as a goodwill. That firm might be having goodwill, that's why partner is being given more than what his capital account shows. और जब आप फ्यूचर में वो एसेट बेचोगे तब ये जो प्रोपोर्शन हमने निकाला उस प्रोपोर्शनेट वैल्यू उस एसेट की सेल वैल्यू में से माइनस करके आपको टैक्स देना है। दैट इज रिटन अंडर विच सेक्शन? सेक्शन 48 क्लोज नंबर 3। आई थिंक यहां तक क्लैरिटी होगी। अब नाउ नेक्स्ट इज सेकंड एग्जांपल ऑफ CBDT दैट इज वेरी इंटरेस्टिंगली ड्राफ्टेड। उनका यह कहना है कि पहले एग्जाम्पल में पार्टनर को 11 लाख दिए गए प्लस 50 लाख की लैंड यू दी गई। 50 लाख की लैंड यू उसको दी गई। अगर पार्टनरशिप फर्म ने उसको लैंड यू नहीं दिया होता और लैंड यू को मार्केट में बेच दिया होता, सोल्ड आउट इन ओपन मार्केट, और फिर ये पैसे आए प्लस 11 लाख जोड़ के पार्टनर को 61 लाख दिए होते, पैसे कितने भी आए लैंड यू के, मान लो उन्होंने मार्केट में 50 लाख से ही बेची, और फिर ये पैसे उन्होंने पार्टनर को दिए होते, यानी पार्टनर को सिर्फ कैश दी होती। ठीक है, तो उनका ये कहना है तो भी आंसर सेम रहता। अगर आप लैंड देते तो भी आंसर ये बनता, और लैंड 50 लाख की बेचकर अगर आप उसको पेमेंट कर देते 11 लाख प्लस 50 लाख का चेक, तो भी आंसर वुड बी एप्लीकेबल। फर्क क्या होगा यहाँ? फर्क क्या होगा? आर यू गेटिंग? इन दिस सिचुएशन एग्जांपल 2, लैंड यू थर्ड पार्टी को बेच रहे हैं, आउटसाइडर को, और जो पैसा आया वो पार्टनर को फिर चुका रहे हैं। तो इस सिचुएशन में सेक्शन 9B वुड नॉट बी एप्लीकेबल, क्योंकि 9B कब एप्लीकेबल होती है? देयर वुड बी अ ट्रांसफर ऑफ कैपिटल एसेट और स्टॉक इन ट्रेड टू द पार्टनर। तो यहाँ पार्टनर को कुछ नहीं दे रहे हैं, जो लैंड यू है उसको बेचकर पार्टनर को पैसा दे रहे हैं, और 9B में कैश वर्ड इज नॉट देयर। यू गॉट द पॉइंट? तो इन दैट सिचुएशन सेक्शन 9B वुड नॉट बी अट्रैक्टेड। तो उनका ये कहना है कि भले ही सेक्शन 9B वुड नॉट बी अट्रैक्टेड, अगर आप कैपिटल गेन का कैलकुलेशन करें देन रिजल्टेंट आंसर वुड बी द सेम। अगर आप लैंड ड्यू पार्टनर को दे या लैंड ड्यू बेचकर आप उसको पैसा दे, फर्म के ऊपर टैक्स लायबिलिटी तो दोनों में सेम ही बनेगी। दैट इज व्हाट दे हैव क्लैरिफाइड वेरी इंटरेस्टिंगली, दैट दे हैव प्रूव्ड। इवन यू कैन प्रूव इट, यू विल फाइंड द सेम प्रूफ। आई हैव नॉट गिवन कंप्यूटेशन हियर। अब लास्ट एग्जांपल and then I will discuss some intricacy that whether these amendments will help the central government or not, and then we will have a small session on question answer if time permits. Now let us look at example 3. ये थोड़ा अलग से एग्जाम्पल है, थोड़ा पे अटेंशन करें। जितने टिके हैं 10-15 मिनट टिके रहे, काफी लोग चले गए हैं, 10-15 लोग चले गए हैं। यहाँ भी 3 पार्टनर हैं हैविंग इक्वल शेयर। बैलेंस शीट में सबकी 1-1 करोड़ कैपिटल है, कुल मिला के टोटल कैपिटल है 3 करोड़, और 3 एसेट हैं, लैंड एस, पैटेंट टी, सॉरी 2 एसेट हैं, और फर्म इज अ कैश रिच फर्म। 2 करोड़ 25 लाख उनके पास कैश है, लैंड की बुक वैल्यू है 30 लाख रुपए, पैटेंट टी इज 45 लाख रुपए, और जो एक पार्टनर है वो रिटायर होना चाहता है, और रिटायरमेंट के वक्त उसको जब रिटायरमेंट हुआ तो जो एसेट है लैंड एस और पैटेंट टी, तो लैंड एस है वो लॉन्ग टर्म है और जो पैटेंट टी है वो शॉर्ट टर्म है। जब रिटायरमेंट हुआ तब उन्होंने सारी वैल्यूएशन करवाई रिटायरमेंट के टाइम पे, तो लैंड एस का वैल्यू बना 45 लाख, पैटेंट टी मार्केट में जाए तो 60 लाख रुपए, एंड देयर इज अ गुडविल। We call it as a self-generated goodwill because it is not appearing in the books, but they computed goodwill of rupees 30 lakh rupees. और ये सब कुछ ध्यान में रखते हुए उन्होंने पार्टनर ए का अकाउंट सेटल किया। किस तरह? उसको कैश चुकाई 75 लाख रुपए, और जो लैंड एस है वो डिस्ट्रीब्यूट की, जिसकी एफएमवी क्या है 45 लाख रुपए। और मजे की बात यह है इसी प्रैक्टिकल में उन्होंने इंडेक्स कॉस्ट ऑफ लैंड भी 45 लाख एज्यूम की है, फॉर सेक ऑफ ईजनेस फॉर द ऑडियंस एज वेल एज फॉर द रीडर्स। तो बहुत सिंपल सा सम है ये कि यहां मिस्टर ए रिटायर हो रहे हैं, उन्होंने वैल्यूएशन करवाया लैंड एस टी, और वैल्यूएशन के टाइम पे गुडविल भी मिली 45 लाख, 60 लाख, 30 लाख वैल्यू है, और पार्टनर ए को पैसे दिए जा रहे हैं 75 लाख प्लस 45 लाख, यानी दोनों मिलाओ आप तो 120 लाख रुपए दिए जा रहे हैं। ठीक है, और लैंड की इंडेक्स कॉस्ट 45 लाख बताई गई। तो यहाँ रिटायरमेंट है, डिस्ट्रीब्यूशन ऑफ लैंड एस है, कैपिटल एसेट का डिस्ट्रीब्यूशन है, इसलिए सेक्शन 9B लागू हो जाएगी। 9B क्या कहती है? जो एसेट आपने पार्टनर को हैंडओवर की उसका कैपिटल गेन निकालो एज पर दी चैप्टर कैपिटल गेन, और कैपिटल गेन निकाल के वक्त सेक्शन 9B कहती है उसकी एफएमवी ले लो एज अ सेल कंसिडरेशन। तो एफएमवी है 45 लाख, उसकी इंडेक्स कॉस्ट भी उन्होंने दी है 45 लाख, यानी कैपिटल गेन इस सम में बन रहा है 0। उसके पर आप कैपिटल गेन टैक्स निकालो तो 0 पे कुछ भी निकालो तो 0 ही निकलेगा। ठीक है, अब कैपिटल अकाउंट क्या बनेगा पार्टनर का आफ्टर रिटायरमेंट, एट द टाइम ऑफ रिटायरमेंट? What will be the capital balance? तो हमें पहले बुक प्रॉफिट निकालना होगा। तो लैंड की मार्केट वैल्यू कितनी है? 45, और बैलेंस शीट में देखे लैंड की बुक वैल्यू कितनी है? 30 लाख रुपए। तो 45 में से 30 लाख घटाए तो बुक प्रॉफिट आया फर्म का 15 लाख रुपए एट अ टाइम ऑफ रिटायरमेंट। टैक्स 0 है, इसलिए पोस्ट टैक्स प्रॉफिट भी कितना आया? 15 लाख। 15 लाख को आप 3 हिस्सों में बांट दो, 5-5 लाख, तो एक एक पार्टनर को मिलेगा 5 लाख। और पार्टनर की कैपिटल क्या थी? 1 करोड़। यानी एट अ टाइम ऑफ रिटायरमेंट पार्टनर की कैपिटल कितनी हुई? 1,05,00,000 रुपए, 105 लाख रुपए। ठीक है, यहां तक कोई दिक्कत? अब क्या होगा? रिटायरमेंट है और कैपिटल एसेट हैंडओवर की जा रही है। इसका मतलब यह हुआ कि 45(4) भी लागू होगी। 45(4) की फॉर्मूला क्या है? B + C - D। इसको आप मत पढ़े, A B C ना पढ़े, ये B + C - D जो एक्ट में फॉर्मूला है, इसको आप पढ़े B, इसको आप पढ़े C और D। ठीक है, तो कैपिटल गेन आएगा B + C - D। व्हाट इज कॉल्ड B? B is nothing but, sorry, this is C. B is nothing but money received by the partner. So in our example, what is the money received? Cash received is 75 lakh. Then C is value of asset received. The value of asset is 45 lakh. अब दोनों का टोटल करोगे तो कितना होगा? 1,20,00,000। माइनस क्या करना है? D is balance in capital account, जो अभी हमने निकाला ऊपर 1,05,00,000 रुपए। ये रहा कैपिटल बैलेंस 1,05,00,000। तो आप माइनस करोगे 105, तो आपका कैपिटल गेन आएगा 45(4) में कितना? 15 लाख रुपए। 120 में से अब 105 माइनस करो, कितना गेन आएगा आपका? 15 लाख रुपए। क्लियर? अब ये 15 लाख एट्रीब्यूट करने हैं कौन सी एसेट के ऊपर? रिमेनिंग एसेट। तो 2 रिमेनिंग एसेट है, एक है पैटर्न टी और दूसरा है सेल्फ जनरेटेड गुडविल। कौन से रेशियो में? तो उनकी वैल्यू में जो बढ़ावा हुआ वो, तो पैटर्न टी का बुक वैल्यू था 45 और मार्केट वैल्यू 60 लाख, तो बढ़ा हुआ 15 लाख। गुडविल की बुक वैल्यू थी, बुक पे थे ही नहीं क्योंकि सेल्फ जनरेटेड है, 0। मार्केट वैल्यू निकाली वैल्यूअर ने 30 लाख, यानी इंक्रीज इन वैल्यू हुआ 33 लाख रुपए। प्रोपोर्शन आप देखें 15:30, यानी ये 1/3 हुआ और ये 2/3 हुआ। 40/4 का कैपिटल गेन कितना आया? 15 लाख रुपए। ये 15 लाख आपको एट्रीब्यूट करने हैं 1/3 एंड 2/3। 5 लाख जाएंगे पैटर्न की तरफ, 10 लाख जाएंगे गुडविल की तरफ। जहां तक पैटर्न का सवाल है, पैटर्न इज अ शॉर्ट टर्म एसेट, इसलिए 5 लाख जो गेन आया दैट वुड बी टेकन एज अ शॉर्ट टर्म गेन। जहां तक गुडविल का सवाल है, वी डोंट नो कि फर्म कितनी पुरानी है, लेकिन सिविल ने लिख दिया गुडविल इज ऑल्सो शॉर्ट टर्म, क्योंकि आपको पहली बार मालूम पड़ा पार्टनर रिटायर हो रहा है तब गुडविल हो रही है, इसलिए इसका गुडविल का वैल्यूएशन, गुडविल का भी टेन्योर आप पकड़ लो शॉर्ट टर्म, इसलिए आपका पूरा गेन शॉर्ट टर्म। दिस इज समथिंग अमेजिंग व्हाट सीबीडीटी हैज अज्यूम्ड। अब जब फ्यूचर में आप पैटर्न टी बेचोगे, फ्यूचर में आप पैटर्न टी बेचोगे, तो उसकी जो सेल कंसिडरेशन आएगी उसमें से ये 5 लाख कम हो जाएंगे और बाकी जो पैसा बचा दैट वी विल रिड्यूस फ्रॉम ब्लॉक, बिकॉज पैटर्न टी इज अ डेप्रिसिएबल एसेट, डेप्रिसिएबल इंटेंजिबल एसेट। और जहां तक गुडविल का सवाल, अगर आप फ्यूचर में गुडविल बेचते हो मान लो 50 लाख में, तो आपको 50 लाख पे टैक्स नहीं देना है गुडविल को लेकर। 50 लाख में से 10 लाख आपको घटा देना है, क्योंकि 10 लाख पे आप 45(4) में ऑलरेडी टैक्स दे चुके हो। यू गॉट द पॉइंट? इसलिए आपको 10 लाख पे टैक्स उतना कम देना होगा फ्यूचर में जब आप गुडविल बेचोगे तब। तो दिस इज समथिंग वेरी इंटरेस्टिंग। तो आई मेड इट क्लियर in part 3. What I made it clear? I made it clear when the section 9B would be applicable, when section 45(4) would be applicable, when both will be applicable, what are the distinctions among 45(4) and section 9B, how to calculate capital gain, how to attribute capital gain under section 45(4), and how to reduce tax liability at a future date, that would be via a reduction from sale consideration under section 48 clause number 3. This is we have discussed till so far. Now part 4. That would be possible litigation. What are the possible litigations? Pay attention. Litigation number 1, possible litigation, that whether this amendment would help income tax department, because I already discussed in the part A series of judgment where courts are very clear that unless there is a transfer, there cannot be a capital gain. Now, what the attempt done by these amendment is section 9B. The attempt was made by writing a deeming transfer. Under section 9B, they use the word, this is called deemed transfer. Whether this deeming transfer would be of help to the department, that would be the first debate that we may face very soon, wherever the high stake is involved. Second, so far as 9B is concerned, deemed transfer may help, may not help, only time will say. So far as 45(4) is concerned, I am of the strong view that it will not sustain, because 45(4) is a part of chapter capital gain, where there is no wordings used called deemed transfer. And present 45(4), Supreme Court, High Courts have categorically laid down that it is a machinery section, unless you meet the requirement of transfer as per clause number 47, section 2, you cannot come to section 45(4). Therefore, machinery section fails, there cannot be a capital gain. So I am of the strong opinion that 45(4), there can never be a tax in future. Therefore, if stake involved is very high, you must not offer capital gain under 45(4) and advise client to go for litigation. Of course, it is all depends on court. That court may revisit 45(4) along with 9B, and court will say that what is the purpose behind the amendment. These are all possibilities. But looking to the earlier judgments, this possibility is remote that 45(4) can be sustained. Therefore, my view is that 45(4) may not sustain in future. Very soon we will find it, unless definition of transfer get amended by a specific amendment under section 2, clause number 47. So this is the first debate we may encounter very soon. Second debate which may come into picture is all about applicability, because they made it applicable retrospectively. But if you look at the rules, they have not given the date of applicability. So that would also create an interesting litigation. Third litigation which may arise for 45(4), because if you read the 45(4) along with section 48, then it talks about attribution to the remaining asset. Then one can argue that there are no remaining assets. Then how can you attribute? And if there is no attribution, then 45(4) may fail. You cannot assume that attribution towards a assumed goodwill. You got the point. So this kind of litigation one may see very soon. Another litigation about nature of asset. That how to determine nature of asset. Somebody may challenge the rule also. The way rule has been drafted and the way attribution has been given there. So these are the areas. Interestingly, one more point is section 9B says you go to chapter capital gain for determination. Now the issue is 9B is not a part of section 45. It is an independent code in the beginning of the Income Tax Act. So can I claim exemption under 54 EC kind of thing for the partnership firm? 54 EC, 54 GB, where partnership firm can claim exemption from capital gain. That may create a litigation in near future. because section 9B is not a part of chapter 45. Only they are referring computation mechanism under chapter 45. My view is that when they are referring computation mechanism, then computation will end only after claiming exemption. Therefore, my view is that you can claim exemption. That is what my view is. But department may take an adverse view that section 9B is just referring for measurement of capital gain, not for exemption from capital gain. Only for the measurement you go to chapter capital gain, not for the exemption. This kind of litigation we may envisage in near future. I think this is what exactly 45.4 section 9B and the amendment which I wanted to highlight. I request the office bearers that somehow I slightly finished in time, or we can say earlier. If any questions audience will have.
Yes, sir.
Yes,
sir.
I request that question would be given in chat box. That would be better.
Yes.
Because I got some. I think I'm not able to listen properly.
All the members are requested to write your query into the chat box, so we can one by one we can discuss one by one queries. First query is, sir.
Oh, already there are many queries coming. Okay, let me read from one by one. The question is coming from Nishit that land has been given away to the partner. Whether 45.4 and 45.1 will be applied simultaneously. You see, Nishit, 45.1 has no role to play here. 45.1 is all about entering into the capital gain chapter, which is applicable in a general way. But when there is a special provision about retirement or reconstitution, then special provision will curtail the scope of general provision. In that situation, we have to apply only 45.4 and not 45.1. It's a good question, Nishit. But in this situation, you should apply only 45.4 when land is given to a partner, not 45.1. Next is Ritesh. Okay, he is asking for presentation that definitely I will share. Next is we have got that question is coming from Chandrasekhar, that attribution takes place among a remaining asset. Then why not to attribute in book value? Point is good. You may attribute even in books. Nobody can stop you. If you want to attribute, definitely you can attribute. But that attribution in the book value of asset, pay attention very importantly, will not result into higher cost of acquisition in the hands of firm. Let me put it in other words. जो हम attribution करेंगे, अगर book value में भी हम attribution market value पे book asset ले जाते हैं, when partner retires, तो जो value हमने बढ़ाई, वो increase value पे आपको कोई फायदा income tax में नहीं मिलने वाला है. Meaning thereby, वो जो increase value है, अगर वो depreciable asset है, तो उसके पर आप increase value पे depreciation नहीं ले पाएंगे, जो attribute किया वो आपने. अगर वो नॉन डेप्रिसिबल एसेट है और अगर आप फ्यूचर में बेचते हैं तो यू कैन नॉट क्लेम इट एज ए हायर इंडेक्स कॉस्ट. हाँ, जो एट्रीब्यूट किया है वो आप सेल कंसिडरेशन में घटा सकते हैं, उतना आप बेनिफिट ले सकते हैं, बट यू कैन नॉट टेक एडवांटेज ऑफ हायर कॉस्ट एंड यू कैन नॉट टेक इंडेक्स्ड कॉस्ट इफ इट इज अ लॉन्ग टर्म कैपिटल एसेट. दैट इज जस्ट आई एम क्लैरिफाइंग. अनदर क्वेश्चन इज रेज्ड फ्रॉम मनीष अग्रवाल कि सर ये जो आपने समझाया, ये समझने के बाद ये इशू हो रहा है कि भाई हर टाइम रिकंस्ट्रक्शन हुआ, हर टाइम हमें एसेट का रिवैल्यूएशन करवाना पड़ेगा. तो मनीष का जो ऑब्जर्वेशन है वो बहुत करेक्ट है. यानी हमारे में से जो वैल्यूअर है या कोई रजिस्टर्ड वैल्यूअर बनना चाहता है तो रजिस्टर्ड वैल्यूअर बन जाए, क्योंकि हर एक टाइम पे जब रिकंस्ट्रक्शन होगा पक्का ये सिचुएशन में आपको रिवैल्यूएशन करना पड़ेगा. फिर क्वेश्चन ये आया है विशाल मेहता की तरफ से, when land T is sold, then at that time ₹20 lakh is deducted, and what about index cost of acquisition? So that is going to be allowed. ध्यान दे विशाल, 48 में 3 रिडक्शन है. पहला रिडक्शन है कॉस्ट ऑफ एक्विजिशन, दूसरा रिडक्शन है कॉस्ट ऑफ इंप्रूवमेंट 48.2, और तीसरा ये उन्होंने रिडक्शन दिया है. तो आपको कॉस्ट ऑफ एक्विजिशन और कॉस्ट ऑफ इंप्रूवमेंट तो बाद मिलने ही वाली है, ओवर एंड अबव जो ये एट्रीब्यूट हुआ 45(4) में वो बाद मिलेगा। The next question is coming from Jaimin Shah. Whether amount of transfer in unsecured loan amount to money transfer or not. If I understand this question in this way, Jaimin ये कह रहे हैं कि पार्टनर को आपने डेटर्स कलेक्शन है, फर्म का कोई कलेक्शन है या फर्म ने किसी को अनसिक्योर्ड लोन दिया है, that unsecured loan you are giving to a partner. So is it called money? Answer is no, it is not called money. It is called money's worth. It cannot be called money. It can be converted into money, but it is right now not a money. So in my opinion, whenever some rights are given in the recoverable, like debtors or unsecured loan granted by the partnership firm, in my opinion, prima facie, it cannot be equal to money. It cannot be taken as exactly money. It can be money's worth, but it cannot be taken as money. So that again may invite a litigation. It is a wonderful question. Then there is a question coming from, I think, Amit Kumar Prajapati. He said that there are 3 partners having capital in the books. सबकी कैपिटल है 12-12 लाख रुपए और एसेट की वैल्यू भी जो है सॉरी अमित कुमार जी सिंह कि पार्टनर की टोटल कैपिटल है 12 लाख रुपए, इफ आई एम नॉट रॉन्ग, और उनकी एसेट की बुक वैल्यू भी 12 लाख है और मार्केट वैल्यू ऑफ एसेट है 50 लाख रुपए. Now all the 3 partners retired and new partner admitted. Now the first question is whether it is a reconstitution. If all 3 partners retire, what reconstitution definition says? Reconstitution is one partner before change will continue to remain as a partner after change. If this would be the situation, in this case, my opinion would be neither 9B nor section 45(4) would be applicable. Next question is coming from Raj Shah. In case of admission of partner, as such nothing is transferred, but share of other partners get transferred. Will section 9B or 45(4) would be applicable? You see, that is what they are trying to envisage, that you should do revaluation of asset and you should compute. But if you look at section 9B, it says you must transfer capital asset or you transfer stock in trade or both. And if you look at section 45(4), it says you transfer capital asset or money. So what I am answering your Raj question कि अगर रिकंस्टिट्यूशन हुआ है पार्टनरशिप का और सिर्फ एडमिशन हुआ है और एडमिशन के टाइम पे कोई एसेट ट्रांसफर नहीं हुई और कोई पैसे नहीं दिए गए रिमेनिंग पार्टनर को, अगर ऐसी सिचुएशन है सिर्फ जो इनकमिंग पार्टनर है वो पैसा लेकर आया है बस, there is no transfer to remaining partner in the form of asset or money, so in that case neither 9B or 45(4) would be applicable. Next question is coming from Dharmesh Parikh, that whether this 9B and 45(4) would be applicable to LLP as well. Answer is yes, because if you refer the definition of term firm under section 2 of the Income Tax Act, firm includes LLP. And that's why in that event, what we have read 45(4) and 9B, they are equally applicable to LLP as well. Next question is, when profit sharing ratio is changed, profit to be distributed to partner at old or new profit ratio. I'm not getting the question, but if profit sharing ratio is changed, and if there is some transfer of money among the partner, then whatever partner received the money, for that partner, we need to work out section 45(4). So 9B would not be applicable, but 45(4) would be applicable. One more question is coming from Chandrasekhar. I already answered, Vishal has already raised a similar question, that when in future you are selling the asset, why only attributed amount would be reduced and why not other amount would be reduced. I think, let me again clarify, section 48.3 is there. It is not the entire section 48 they have substituted. 48.1 gives reduction of cost of acquisition, 48.2 gives the reduction of cost of improvement, and 48.3 gives the reduction of 40 attributed amount. That means you can claim cost of acquisition as well as cost of improvement. Okay, now Dharmesh bhai is more clarifying his question कि अगर रिकंस्ट्रक्शन हुआ है और जो पार्टनर का बैलेंस है वो हमने लॉन में कन्वर्ट किया और सब्सिक्वेंटली पेड ऑफ किया, नाउ क्वेश्चन इज परफेक्ट। यानी नॉर्मली हम क्या करते हैं, जब पार्टनर रिटायर होता है तो हम क्या करते हैं कि उसकी जो कैपिटल बैलेंस है उसको लोन में कन्वर्ट कर देते हैं, और फिर बाद में हम क्या करते हैं, फ्यूचर में जब पैसों की व्यवस्था होती है फर्म के पास तब हम उसको पेमेंट करते हैं। So whether this section will be applicable, answer is yes. Law clearly mentioned, Dharmesh bhai, on a receipt of money, this section will be applicable. So what is the time of attacking this section? If you read section 9b or 45.4, on receipt of money or capital asset, when we read 45.4, and when we read section 9b on receipt of capital asset or stock in trade, then this taxability get triggered in the year in which such asset is being received by the partner. That's why in future when you hand over, yes, at that time capital gain would be applicable. Chandrasekhar question that, sir, in Amit example, capital gain may accrue to retiring partner. Now I need to go back. It's very difficult to go back. I'm sorry, Chandrasekhar, I'm skipping this question. Now I'm coming to Jayesh Panchal because there are another 8 issues very coming. As per 45.4, attribution in future, we will get exemption of 20 lakh as per your example. I am sorry, it is not my example, Jayesh, it is CBDT's example. What is the value of money after 10 years when sell our asset, 20 lakh become 10 lakh? What Jayesh is asking, sir, CBDT is calculating 20 lakh today. But we have studied in our finance management doing CA that because of inflation, the value of 20 lakh will become 10 lakh, sir. So this is unfair. I appreciate, Jayesh, that this is really unfair. But in Gujarati, there is one saying that they are giving reduction. And Gujarati, there is one saying called Nata Mama Karta Kahano Mamo Saro. At least CBDT aparne deduction to ape je. So we should be happy with what deduction we are getting. Another question is coming from Gaurav Parmar. It is all about change in profit sharing ratio. He had extended a question when there is a change in profit sharing ratio. While computing the accounting profit and distribute such accounting profit to partner, still I am not getting this question. Gaurav, I am not able to understand your question exactly. I think I exhausted all the questions raised before the screen. I request Harses to take the charge of the session.
Sure.
Before that, Hars, let me conclude. First of all, I am thankful to the Almighty who had given me this wonderful soul, mind, body, so that I am present before you. And because of only His blessings, I am able to deliver this lecture, and I have tried my level best to make it lucid so that one can understand very easily. Again, I am thankful to the Ahmedabad branch for inviting me often on various topics under the direct tax. Again, I am thankful to my friend Sunil that who had given me wonderful introduction, Anjali who had started the session, and our chairman, and the Harses who is about to end the session. Thank you. And I am again thankful, I am sorry, to all participants who remained present in this large number to listen to this topic. Thank you.
Thank you. Thank you. Thank you. What is not enough, Mehul sir? It is with the same energy which was you have provided in the classroom, whatever is the platform, You are always covered the combination of theory and practical, and the way you are explaining it is means mind માં એવું છપાઈ જાય છે કે ક્યારે ભૂલાતું નથી. So thank you very much for giving a very insight information on these two sections, and really thank you on behalf of Ahmedabad branch of WIRC and all the participants. Thank you, Mehul sir, for giving us such a wonderful session, and thank you all the participants for patiently listening. So thank you everyone for joining today. Our next session is tomorrow, so please kindly join in time. Thank you everyone.